Hello everybody, my name is Christian Charlo. Welcome to this market report. Today we're Thursday, November 13, 2014. Today, folks, I want to talk to you about a movement that is a bearish movement that is resuming on the energy and mining sector on guru.tv that you can have access for free for 10 days just by clicking at the link below. We published today a list of some stocks in the energy sector where we had several short opportunities. But what I want to bring to your attention, though, is what the technical pattern that we're starting to have on the energy sector on the U.S. Because if we take a look at the U.S. situation in the energy sector, we have what's called the beginning of a bearish divergence. What is a bearish divergence? Is by looking at the MACD histogram that I'm seeing that. So what is a bearish divergence? If we take a look at this situation here, what we had actually the energy sector in the U.S. that pursue its rise. The MACD histogram is an indicator that allows us to see on this rise, are the volumes being increasing? Are they constantly increasing? So far what we have seen is that while the energy sector was pursuing its rebound, the MACD histogram actually went lower. So on that high, which was higher than that high here, the MACD histogram went lower. So that means that it's a clear bearish divergence, and that means that the volumes that led the energy sector to rise is actually not convincing enough, and we might actually have a probability that the sector might actually lose its upward momentum and start a breakdown. And today, this is what we have on the energy sector in the US, which is clearly starting a bearish cycle. Because this is a neutral formation, we're actually starting a bearish cycle. However, the risk is that on November 4th, we made an attempt to start a bearish cycle. We actually rebounded. And also, on October 27, we made an attempt to start a bearish cycle, and we actually rebounded. So I think you have to definitely be picky in the type of stocks that you choose to short today, because there are not a lot of them that actually have at least 10% potential on the downside on the energy sector on the US. So I know that last week I've talked about the best short opportunities in the energy sector. So let's take a look to see how those stocks have reacted that I've talked to you about. First of all, talking of oil, today oil is clearly starting another breakdown. So on November 4th, when I made the chronicle, I said go in on bearish ETF on oil. There was HOD on the TSX, there was SCO on New York, and on November 4th, those of you who participated in that movement today, you can say ching ching, I'm making some money, take some profit on those bearish ETF. Or those of you who have not participated, well, today you can again get into those bearish ETF. And the reasons why oil is going down, from what we heard, from what we have seen in the press releases, is that for the first time since I think 1980, the U.S. has produced 9 million barrels of oil per day. So it's the first time that it's happening, which means there's much more supply on the market, much more supply, not enough demand, price going down. So this is why actually we have this clear bearish cycle on oil, and HOD and SCO or steel ETF that you could trade today to actually benefit from this bearish momentum. Now on the energy sector in the TSX, though, what we actually also didn't perform well for the bearish cycle that we started on November 4th. So I know on November 4th, I've mentioned that on marketgurus.tv that you can have access for free for 10 days. There was this bearish ETF, which is HED. HED, I think those of you who participated in the movement on November 4th when the ETF clearly broke out, so far you have not made some money, but you have not lost at all, because this was a support, and as long as that ETF was staying above that support at 1250, you should have held on to it. So that ETF is still an ETF that you have to hold on to because it's still above that support at 1250. However, below 1250, goodbye HED. There was also that stock that we talked about that was a short opportunity on November 4th. Well, on marketgurus.tv, though, we had to close that position because our exit point was if ever the stock broke that former resistance, we had to close it. So when the stock did break that resistance, we closed that short position. So it didn't work. But right now, are there some new opportunities to short on the TSX? Well, yes, there are. And one of the best opportunities that we find and that we recommended on marketgurus.tv that you can have access for free for 10 days on clicking at the link below is that stock here is Well Services. So we're recommending full position on that stock simply because when we take a look at the energy sector on the TSX, though, it's a sector that is clearly starting a bearish cycle, and Same thing in the US, is doing the same bearish divergence, and it could actually head towards that former low here at 244.53. So there's some potential on the downside though on the energy sector on the TSX, and this is why we feel more confident in recommending a full position on a stock like Trickle Oil Services. And your exit point should be around what, 1003, 1035 on a stock like Trickle Oil Services, because around those area, this is where the stock will clearly reverse its downward trend. So it's the best stock to short on the TSX today. Also, the energy stocks are going down today, but there's also a lot of stocks in the industrial sector. What we're starting to see, a lot of subsectors in the industrial sector like heavy construction, we're putting a lot of downward pressure. For instance, you see that this short-term upward corridor is breaking down. So we're starting a slight bearish cycle there on the heavy construction sector. And there's some stocks like IGON which could start a breakdown. So I think that stock should be put on your watch list. If ever it does break down, goes below 1880, it could be a nice short opportunity for a target of 17 bucks. So there's about a 10% or more potential to be made on that stock if it does go below 1880. So that stock should be watching the industrial sector. And today the energy sector is clearly starting a bearish cycle, just like oil. So what you could do, you could trade it with some bearish ETF, HOD or SCO New York for oil, and for the energy sector in the TSX, HED. For the energy sector on the US, it's ERY, which still represents an ETF that you should hold on to, or you can build up your position, long positions, by acquiring that ETF while it stays within its sideway formation, by making sure that you get out below that support at 17 bucks. So this is the list here. Trickle Oil Services is the best short opportunity to trade the bearish momentum of the energy sector on the US, ERY on the TSX, each HED, and on oil, those two bearish ETF are key to allow you to make some money on the clear bearish ETF of oil. So this was Christian Charlo from MarketGurus.tv. See you next week for your market report.